Welcome to this explainer. Today, we're unpacking a seriously fascinating, high-stakes financial drama. We're going to look at the massive firewalls India's central bank is deploying right now to protect the economy from a major currency crisis. Now, if you've been watching the markets lately, you know things are heating up. But the actual nuts and bolts of how a country defends its money, it's absolutely brilliant. Okay, let's just dive right into this. Dramatic low, 96.96 against the US dollar. That is the record plunge the Indian rupee just hit. And look, this isn't just some random number on a ticker tape. It establishes massive stakes for the domestic market. It literally impacts everything from the cost of importing everyday goods to the broader health of the entire economy. When a currency drops this fast, the central bank, well, they can't just sit back and watch. They have to act, and act fast. So to understand exactly how the Reserve Bank of India is fighting back, here is our roadmap for today. We'll cover the rupee's record plunge, the first line of defense, a rather dangerous side effect, the $5 billion masterstroke, how the swap actually works, and finally, can the firewall hold? All right, starting off with Section 1, the rupee's record plunge. So what's causing this? Well, there are three main macro factors basically squeezing the life out of the rupee right now. First up, geopolitical tensions, specifically the conflict in West Asia, which is just breeding global uncertainty. Second, because of all that uncertainty, we're seeing really high crude oil bills. And you got to remember, India imports a massive amount of its oil. So when crude gets expensive, a ton of dollars leave the country just to pay for it. Finally, foreign portfolio investors are pulling their funds right out of the Indian market. Put it all together, and it's a perfect storm of dollars exiting the system, which naturally leaves the local currency much weaker. Moving on to Section 2, the first line of defense. Think of this phase as emergency triage. The RBI basically had to act as a massive shock absorber. Treasury desks estimate they've been pumping heavily into the spot market, selling nearly $1 billion per day. Yeah, you heard that right, $1 billion a day. By flooding the market with dollars, they physically intercept and slow down the dollar's rapid rise against the rupee. It's a blunt instrument, it's forceful, but hey, it works to stop the immediate bleeding.
But of course, that brings us to Section 3, a dangerous side effect.
Because, as you might guess, defending the currency directly like that severely drained the nation's foreign exchange reserves. We're talking about a plummet from a very healthy peak of $591 billion straight down to a three-year low of $563 billion. I mean, it makes sense, right? You simply cannot sell $1 billion a day without your national savings taking a massive, massive hit. And this created a pretty severe dual threat. First off, those depleted reserves now only cover about 8.7 months of imports. But the real kicker here, when the RBI sells dollars in the spot market, it takes rupees in return. This action accidentally vacuums vital cash right out of the domestic banking system. So while they were busy saving the exchange rate, they were simultaneously and accidentally suffocating domestic banks of much-needed liquidity. Which leads us perfectly into Section 4, the $5 billion masterstroke. Enter the $5 billion dollar-rupee buy-sell swap auction. Now, this is a highly strategic liquidity management tool. Essentially, the central bank buys dollars from domestic banks in exchange for Indian rupees, and then immediately signs an opposite agreement promising to sell those dollars back at a later date. It acts as this strategic cure with zero exchange rate or market risk. Why? Because the terms and the premiums are completely locked in and set in advance. Pretty clever, right? Let's break that down a bit more in Section 5, how the swap works. Here is exactly how this elegantly plays out in 3 simple steps. Step 1, domestic banks park their excess US dollars with the RBI. Step 2, the RBI gives those banks Indian rupees upfront. And Step 3, they completely reverse this trade in exactly 3 years. It's a secured, temporary trade that brilliantly solves 2 massive problems at the exact same time. And the impact of this, it is absolutely staggering. This single move pumps roughly 42,000 to 43,000 crore rupees right back into the domestic money market. That instantly fixes that dangerous side effect of vacuumed liquidity we talked about earlier. And at the exact same time, it instantly refills the RBI's dollar reserves for the next 3 years, bolstering their defense against any ongoing global pressures. Truly, it's a win-win for both the banking system and the central bank. So, the big question. Section 6, can the firewall hold? The global jury is definitely still out on the long-term outcomes here. For instance, DBS Group is warning of a stagflation light shock, predicting the rupee could hover in the 95 to 100 range.
MUFG, on the other hand, expects a bit of a recovery, forecasting a move toward 92.00 by the third quarter of 2026. But then you have Goldman Sachs taking a highly positive view. They're banking on a strong 6.9% GDP growth, pointing to robust NRI remittances and a growing services trade surplus to really balance the scales. Meanwhile, the government isn't just crossing its fingers and relying solely on the RBI's swap. They are actively preparing backup policy firewalls. For one, they're looking at restricting the outflow of dollars by tightening customs checks on non-essential high-value imports, stuff like gold and silver. They're also considering sweetening the deal to bring foreign money back in, discussing temporary tax relief to attract those foreign portfolio investors, and even creating incentives for non-resident Indians to park their money in specialized dollar deposits. Ultimately, as we wrap up this explainer, we really have to ask ourselves a tough question. With global conflicts raging, oil prices fluctuating wildly, and international investors watching every single move, is this $5 billion masterstroke enough to stabilize the Indian economy in the long run? The mechanics of the central bank's defense are perfectly executed for sure. But the market? Well, the market is a wild beast. Keep your eyes on those foreign reserves and the domestic liquidity levels over the next few months, because honestly, that is exactly where this battle will be won or lost. Thanks for joining me to explore this complex, vital topic. Stay curious.